Hello, it's Tuesday the 23rd. I'm FxPlew and there's a break in the rain, so I'm out for the market brief. Now, the 5 main UK mortgage providers have independently raised their charges for new loans yesterday. They all cited uncertainty over the size of the rate cut. Coincidence or collusion? Far be it for me to suggest there's a mortgage lenders cartel out there, but it does have a faint whiff of collusion, don't you think? Granted, the rises were pretty insignificant, so any suggestion of profiteering is a little bit rich, but any wrong decision by the lenders can still cost them several £millions, so it's significant nonetheless. And the message it sent was perhaps slightly more important. Where the long tail inflation is looking increasingly sticky, some economists think the Bank of England may not cut rates before November. Meanwhile though, KPMG have been on. They released a statement confirming their belief that inflation will indeed return to target in the coming months. As always, there were some areas of uncertainty outlined where the risks remain, and the geopolitical risks in the Middle East was their chosen focus this time around. Over in the US, the last Fed meeting rather stuck to the script, and the idea of 3 rate cuts this year officially remains on the table. However, we may be in for a pivot at the next Fed meeting on May the 1st. Many expect the dot plot to change, forecasting only 2 rate cuts for the rest of the year, as more comments from Fed members have raised concerns over the data and raising caution over the timing of the first rate cut. Their views are supported in the data. Inflation has not been falling at the pace the Fed would like to see, and the economy does remain surprisingly robust, supported by pretty strong job creation. In the general economic outlook, it's pretty bright. And don't forget, the IMF recently forecast that US GDP growth will double that of the G7 average. Meanwhile, in the market, the dollar is being driven higher by the interest rate expectations. Where rates are expected to stay higher for longer in the US, so the yield appeal of the dollar is that much greater. And we saw the dollar index peak around 106.40 yesterday. On the other side of that trade, sterling rather lost ground against the dollar. We dropped to about 123, which is the lowest we've seen since mid-November last year. We kick off this morning around 123.35 against the dollar, about 115.90 against the euro, and euro dollar is around 106.40 on the open this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.